everybody thinks the market's always going to end up going higher after the bear markets. But I really believe that what you're going to see is...
Wow, this number really blows my mind. Over 75% of you who watch the show regularly are not subscribed. If you enjoy the show and want to support us, the easiest and also free way is just to hit that subscribe button. This will help us find new and better guests, and I promise you to continue to work at making this show better and bringing you more value. Welcome back, everybody, to Be The Trader. Today's going to be a phenomenal day because we're going to be diving deep with my man, Joe Valenti, who is going to be turning 91 in 2 weeks, been involved in the markets for over 50 years. And we're going to talk about bear markets because you've seen 4 or 5 bear markets in your lifetime. So should people be worried about bear markets?
Well, the most important thing is everybody thinks the market's always going to end up going higher after the bear markets. And it generally does. If you look back probably in history, every bear market has ended up with everything going higher and brand new stocks surface. And I will tell you this, I think that we've had a long bull market now that's really has been the last 2.5 years been bull markets. And it hasn't been parabolic, but it looks to be parabolic. And that don't mean it might have a little life left. But I really believe that what you're going to see is the bear market's going to start sometime in 25. You're going to have 3 years of 26, 27, 28 of swinging bear markets where we're going to go up in ABC steps, sometimes A, B, C, D, E, like Edson Gould said before.
Yep. 3
steps and stumble, or an ABC coming down. And you could have extra waves within the waves. So I really think a bear market's going to start sometime in 25, and it's going to end in 29. 1929 was the top.
Yep.
2029 will be a bottom. After 3 years of bear market. But there'll be swinging bear markets where you could trade them. In other words, if they go down, they're going to have a bounce back. And most bounces back are ABCs. The longer wave down is ABCDE. And that's just part of the puzzle.
Yes.
But there's a lot of people that write letters on Elliott wave and waves and stuff like that. But most of them you got to see to really see it. And you can always notice it after the fact. After you've seen 3 waves up.
Yep.
And after you've seen 3 waves down. But I just believe that 1929 was historically a top of the bull market. 2029 will be, I believe, historically, the bottom of a bear market.
That's interesting. And what I want to know is, should people, like during a bear market, because a lot of traders are mostly just experiencing bull markets and that's it, right? Like they're younger traders, they haven't really experienced any bear markets. When a bear market really happens, like what are some indications that signal to everyone else, like, okay, we may be in a bear market? Like how would you indicate that?
All the news stations, you know, Newsweek always has the trader on the face of the Newsweek magazine. It's always been pretty close. And I don't know what magazine it's going to be. And it might be CNBC network that might show certain people. And they've got plenty of important people that call nice moves. But they can call them after the move happened.
Yep.
And that's what everybody does. And that's what I'm doing right now. I'll tell you, I think 3 years of bear market, and then the bottom in 2029. And the only reason I think it's 100 years apart. History does repeat. And maybe it's not 29. Maybe it's the end of 28, or the beginning of
30.
30. Yeah, but it's approximately.
Yep.
You never get the waves that's perfect. Nothing's perfect in this world.
By now, you know our show is sponsored by Cobra Trading. I use them every day, and for good reason. I love the fast execution and the great customer service. And it's not just me saying this. Both Benzinga and Forbes Advisor awarded Cobra Trading best-in-class ratings in multiple categories for day traders. You can sign up now with the Be the Trader link below, and Cobra will give you 100 days of free commission, 3 months of free software, and 33% off commission for life. I know you'll be as happy as I am when you trade with Cobra. Now let's get back to the show.
Euphoria is a sign, and we've got a little bit of market euphoria now, but can it go higher? Sure, it can go higher. But the euphoria will tell you it'll stop, like it did stop in the year 2000. But the bear market didn't start in the year 2000 until 3 months later. It was, I think, March or April of 2000 when the bear market really started. And in 73, 74, when that bear market started, it was horrendous.
What was the indication that said it started? Like, is there anything like that? Or is it more of just so many things? Like, could you explain that?
You know, rolling tops. You know, like I told you before, markets don't go straight up and straight down. They just don't do that because it takes time to make everybody buy at the bottom, and it takes time for everybody to sell at the top. A top of euphoria is easier to see because everybody will be very excited. And these are exciting times with a new election guy coming in on Monday, and it's going to be different, and the market's going to be different. Everybody thinks that AI is going to be something else. Maybe it will be, and maybe it won't be. And AI is probably very ahead of itself. But in 5 years, I'm sure it's going to be something else during that bear market. I think that's going to happen. That's my prediction. And hey, I could be right or I could be wrong.
Yep. And I love that you're like, yeah, I could be right, I could be wrong, because like it's all about probabilities. And no one knows.
I just hope I'm alive to see it. But you know, I'm 91
so
now. Being in a couple of weeks, I hope I can. But that means I have to live another 6 years, and it's hard. I'm getting old.
Yeah. You know, whenever you're in a bear market, you did say that you could probably still trade the long side and just buy the bounces, and they're much shorter lived.
Absolutely.
So people should adjust their expectations. They can still trade, just not have grandiose expectations.
They'll have, it should be 3 waves down and 2 waves up. A, B, C, D, E, A, B, C.
And then continue.
Yeah, and it bottoms again and goes again. But it's shallower. And they're eliminating more stocks during each bear market until the last stage of a bear market. It's pretty wicked. But, you know, maybe it won't be wicked. We don't know.
What's the last stage?
The last stage of a bear market will be when things really go down. And that'll happen.
Like a panic?
Yeah. It could
kind of like euphoria, like we're going, then we parabolic?
Yeah, well, it could be. The thing about it is what I think is going to happen, for a bottom to happen in 2029, I think you're going to have some type of panic going into that bottom. And that would be very easy if it happened that way.
Are there, for people to position themselves properly, you know, how are you, like, let's just say even in a swing perspective, right? Swing trading mentality, even investing in mentality, because this could be a huge opportunity for people, right? It could be huge. It could be great.
It could be great for AI. We don't know.
Yeah, you have no idea. So, like, if let's just say we are in a bear market and things start to, you know, go down in multiple steps, A, B, C, D, E, and then A, B, C bounces, and we start to see very clearly. But then how do you know, or what should you be thinking of or looking out for when it comes to catching those reversals and investing a good portion of, you know, because those reversals could, you know, essentially change people's lives if you can see that coming,
yeah,
right?
yeah.
And take a loss, right? And still be able to take a loss if you're wrong.
Right.
Are there some signs or certain companies you should look for during those times?
No, there won't be any signs. But when I tell you at the end of 28 to be a bottom in 29, like I think there could be, 2029, I think there has to be multiple bottoms, multiple of up and down movements for 6 months, 8 months.
Consolidation.
Yeah, of a bottom, because people will be worn out by that time. And, but the ABCs will be good rallies, and the ABCDEs on the downside will be hard.
Yeah.
But when you get a final bottom, and I think it'll be in 29, it has to be multiple bottoms because you have the people that are worn out. And it takes up and down, up and down, up and down.
To wear them out.
And the bottom to get a bottom done. It takes a while.
That's some good advice, because even for those who don't want to actively trade the markets, they want to more invest or even swing trade, most traders have multiple accounts. They'll have their day trading account, their swing trading account, and their investment account, their 401k.
Sure.
And those could be good opportunities to invest that 401k.
Well, not only that, you can go in bear markets to Dow Jones stocks, which are slower moving, not the NASDAQ, or not the primary movers of Apple, NVIDIA, and Microsoft. Although they're great companies, but there's going to be other great companies that's going to evolve out of this.
Yep.
And no, I would just think that the final low will take a while.
Would you say, did you ever play to the short side on bear markets?
Oh, yeah.
Yep.
Sure. Yeah. But I don't play with a lot of money.
Yep.
I play shallow, because bear markets, sometimes you got to make 2 or 3 entries to get your final spot that you want to say this stock is going to go lower. But when
what do you mean?
Well, in other words, you don't invest all at one time. You do it in spots. And if you think if you think NVIDIA is going to come down, because the growth rate's got to slow down to nothing over the next 3 or 4 years, although it's very good right now. And that's what's going to create, you might have to position and get in certain spots in NVIDIA if you want to short it. But I think NVIDIA is going to be a great company, and it's not going to be as big a short as people thinking it's going to be. Can it go down 50%? Yeah.
Yep.
Yeah, 50%, yeah. Because what was the high? 150? Can they go to 75? Yeah, that's 50%. That's no big deal. It can happen.
Yep.
And maybe during the next market low, it'll only go up to where it'll reach the old high.
Yep.
And not make new highs anymore, because that's what happens in Elliott theory. 3 steps and stumble.
So do you feel like people should even worry about when it's going to happen, the bear market, or more so just keep trading, it's not a big deal, like even it happens?
Well, trade smaller.
Okay.
And make sure that you don't lose capital that you can't lose. I always taught my son, trade when you can trade and the odds are with you.
Yep.
Even in bear markets, you can short, but the odds got to be in your favor. Everything's got to be positive, positive, positive. And you can turn negative, because that's what happened. The market will do what it has to do to fool the masses.
Yep.
And if you follow that and be a part contrarian, I love the United States. I think the market's going to be a lot higher down the road. A lot higher.
Yep.
Can Apple go to 5 trillion? Yeah, it can. But much slower over a long period of time.
Right.
Because it's too big and it can't grow like it used to grow. Apple can't grow, and Microsoft can't grow. It can grow, but it can't, and NVIDIA can. They're all almost $3.7 trillion now.
Let me ask you this, Joe. Is there anything that stands out to you in all the bear markets you've been in that the companies that did tank and then recovered or became new companies and evolved, is there any lesson you can pick from all of those that had something similar in common? Like that way people can be thinking, if a bear market does come, what are some similarities in those years of bear markets that have happened in the past that I can learn from and implement into this next bear market when I evaluate companies that I might be looking at that could become, the next NVIDIA, the next Tesla? Is there any things that you'd be thinking about in terms of that? And that's a long question, so I'm sorry.
The only thing I can tell you is the biggest downers are going to be from smaller companies that can't grow anymore. And they're going to have difficulties getting money. When the last president put in $1 trillion in the market, he didn't put $1 trillion, he put $2 trillion in. And there were questions about, why did he do the second trillion? It wasn't needed. But that's why you've seen this grand thing of chasing fewer stocks. And it's a lot of money in the sidelines. I got money on the sidelines, but I'm not going to, because of my age, I'm more conservative. But no, I think that the market's going to be the market forever. And you got to buy the big downers, buy the bear markets when you think it's bottomed. But in 29, if you have a bear market like I think it's going to be, it's going to take multiple bottoms. Because you can't, after everybody's been torn for 3 years, it's got to take multiple bottoms.
Why do you feel like it will take multiple bottoms?
Because people will be worn out.
Okay.
And every rally will be met with stock.
Every rally will be met with sellers?
With sellers.
Gotcha.
Yes, every rally. Because, it can still get parabolic from here. But when things happen parabolic at the end, generally there's fewer stocks making new highs. Fewer. And you could follow that.
Yeah.
A lot of different people that follow that stuff. And the one I follow is FinViz. I think it's a great thing for following highs and lows. And
yep.
And I think
and it's free, which is great. FinViz is free too.
Yeah, it is great. Yeah. Anyway, I've used that, but I use it in everything in different scenarios. I've used insider buying.
Yep.
And insider buying is good. When Jamie Dimon bought his stock at 55 and bought a ton of it, did he know it was going to go to 250?
No one knows.
You can't tell.
Yeah.
But he knew things were happening good in the industry. And is he going to be a seller now? I don't know. He's the chairman of the board, so he can't sell everything. But he can sell pieces out, especially the stuff he bought at 55. Now it's 255.
Well, look, Joe, I want to thank you so much for being here, for sharing a lot of your experiences with everyone on the show, because I know, luckily, thanks be to God, I'm able to talk to you and have this conversation where a lot of people don't have the opportunity to talk to elderly people who have been in the industry for so long.
Absolutely.
And so I'm so thankful that you're able to share this wisdom. And I just want to say thank you, man, from the bottom of my heart.
Thanks, Alex. Appreciate it.
Thank you for finishing today's episode. If you're watching on YouTube, please leave a comment below of one of the takeaways that you are going to implement into your own trading. And if you happen to be listening on a podcast platform, go ahead and leave us a review and let us know what you enjoy about today's episode, because that does go a long way in helping us continue to grow. Again, thank you from the bottom of my heart, and I look forward to seeing you on the next episode.